All right, I'm going to do a little review of this morning's trade. Unfortunately, I didn't have the best. Layout for the video, so I'm going to speed it up and simply just talk through it real quick. I'm going to do it 2x speed. So basically, and I'll get into this range right here, but what I'm looking for is I'm looking for lower prices. And the reason I'm looking for lower prices, I'll get into that at the end. So what I'm looking for right here is I go short. Where am I going short? I'm going short above these relative equal highs right here. Right, so I'm taking a short here. I'm putting my stop up above the high. You see there's a fair value gap in here. What I waited for is I waited for a candle to close above those highs and stay in the lower half of that fair value gap, and then another one closed staying in the lower half, and I felt pretty good about that. So I am looking to accumulate a position inside of that fair value gap. So currently it's tough to say, but we got one contract on, and I do add another one as the market is accumulating right over here. So I'm using essentially these highs. I just kind of showed it. I'm using these highs to pair my orders against. And I've got two contracts on now. It's kind of hard to see with this. I want to see it stay in the lower half. Now, the stop is a little wide because I am thinking that it could wick up here. So I didn't want to bring my stop down and accumulate another order because we could see a wick up, and given the market that we're kind of in, so that fair value gap right there. See that I kind of market should use that as an inversion. Hold that lower. Now I'm targeting the shaded area down here, which is also just below that low. And there's the trade. That's that. So now I want to review the logic of the trade. The logic of the trade is quite simple. Here's the dealing range. This low right here was swept, and these highs, relative highs, were taken. So this is the dealing range low to high. Inside there in the hourly chart is the premium array right here in the inversion fair value gap. Notice the 8 a.m. candle closed underneath the consequent encroachment, and the 9 a.m. candle could not rally above that consequent encroachment, telling me it's showing me it has not an interest to go higher at this point. The market gaps up on the day, so there is a new day opening gap, and the market on regular trading hours, well, let's get down to the 5-minute chart and I'll show you the regular trading hours. Regular trading hours clearly gapping up on the day. So it's logical that the market it's telling us the market's in a deep premium. There's the equilibrium of that range. It's going to seek discount. What are our discount arrays? Well, we have the London low sitting right here, and we have the new day opening gap. So looking on the buy side of the curve, we see that the market's disrespected all of these buy side imbalances, sell side efficiencies, fair value gaps that held price higher. All of these held price higher. So on the sell side of the curve, if your PD arrays, if your premium arrays on the sell side of the curve are setting up in close proximity or within these buy side of the curve footholds, you're likely to see this thing go lower. So dropping down to the 1 minute chart, I'll look at the logic here. So we have this range here, this little internal range, high to low. Why am I picking this one? This high took out that little swing high. This low took out that low. This is a little dealing range inside of a dealing range. And where's the market likely to go? Well, we have the London sell side, and low-hanging fruit for me would be just the top end of that new day opening gap, and that's what I traded to. So as the market put in this fair value gap, why am I picking this fair value gap? Well, number one, I'm looking to see if the market is showing any sort of premium sensitivity, which it is. How? In consequent encroachment. There's the 50%. First candle comes up into it, and it's unable to close above the consequent encroachment. Next one, unable to close. So 2 candles unable to close a body above consequent encroachment. It's kind of telling me that the market is likely going to be respecting this. So if I drop down to a 15-second chart, it's going to show it a little bit clearer. I'm using this swing high, which is in premium of this range, and I'm looking for order pairing above that high. Just like the smart money accumulation, which is taking place right here. So I added 2 contracts, and I distributed my code right there at the high end of this new day opening gap. And that's where I thought the market was going to draw to. Very, really nice bread and butter, clear, obvious, strong liquidity, where I think the market's likely to go to. Get in line with the sell side, which is all overlapping that 5-minute buy side of the curve, which gets disrespected here. Fair value gap. But what is this? A propulsion block on the 5-minute. That is the logic behind